We naturally want to become successful. We also want to take shortcuts, and it's easy to do, but you can never take away the effort of hard work and discipline and sacrifice. Apolo Ohno, remember him, the speed skater? And Apollo gives us more great advice. We can't take shortcuts. You cannot do this 1 day a week, 2 days a week. You can't say, I'll just spend an hour on Sunday afternoons figuring this out. No, 10 to 15 minutes a day, every day, following these charts, spending time, practice trading, filling out your trade worksheet, at least your weekly market worksheet. If you can, your daily market worksheets, following this, taking notes, paying attention to what it is you learn. You will find that as you collect these notes, these worksheets, they will become your trader's almanac. They will be worth their weight in gold potentially in your future. So stay with us every single day, practice trading this stuff, learning how it works. The nuances will not come to you if you are not with us 10 to 15 minutes every day and practice trading as often as there is a trade to be had. And yes, what we teach you here can be used on other stocks and ETFs. We just had to pick 4, so we pick the S&P 500, NASDAQ 100, 20-year bonds, and gold, a nice array of ETFs that, again, are highly liquid and great to practice trade now and follow and chart. They actually chart. Not everything charts. Many things do, but that's another requirement. Hey, great training also in today's notes. If you are a subscriber for free at chartingwealth.com, you will see that we have for you a great training, Every Indicator Can Fail. And it talks about how to use indicators and what to do when things aren't working. Because, my friends, it is not profits that will kill you. It's uncontrolled losses. And yes, there are losses. Trading is as much art as it is science. That's why you've got to learn these nuances. We see the S&P 500, NASDAQ 100 down for the day, bonds way up, gold up. So let's talk about how the week ended and the potentialities for practice trading over the next week. How did this week end up? Well, let's look at what we had. We had a high for the week of 334.19 on the S&P 500. The prior high, 332.95. So we did hit a higher high. However, when we look at where the week ended up, pulled back and such, we have a smaller green lower candle. Long wick on the top, wick on the bottom also, which again means some downward momentum there. And we can see that reflected in the derivative oscillator. Not negative yet, but it's lost a lot. Price percent oscillator just barely, well, it's holding above the red signal line. We ended with a green top. And again, that prior week had been lots of strong down movement. It was buffered over the week, but again, not rising much above where it started moving down on our Heiken Ashi candlestick. So we can see the average pace of up movement has slowed. Price is above the weekly trend line, but again, not strong. We thought perhaps at the close of the prior week on the 31st of January that we might see a rotation over going down on the weekly chart with a weekly vertical crossover going down. Did not happen, my friends. Go to the 2-day chart. What does that show us? Hasn't crossed over going up yet despite 4 days of strong up movement. We don't have, and in fact, there was another day. You're not seeing it reflected in the Monday, Tuesday, or the Friday, Tuesday, Friday, Monday candle. These are 2-day candles. Tuesday and Wednesday, Thursday and Friday, we do see it reflected. Derivative oscillator still negative, losing downward momentum. That all-important price percent oscillator. It has not crossed over going up. It hasn't recrossed, so it's not been strong enough to do that. We go to the 4-hour chart. We can see where it appears to have peaked in the morning on Thursday and sideways and down on Friday. So what are we looking for over the course of this next week? We want to see if indeed on the 2-day chart, are we going to have a crossover going up to parallel the up movement on the weekly, or are we going to see the 2-day continue to move down? Is that going to be enough movement to pull over The weekly chart, we don't know. We're in flux. We're going to let things sort their way out, and then we will let the charts tell us what to do if and when it will be at some point there is a trade on the S&P 500 for us to practice. Now let's go to the Qs. How did the Qs end up? A bigger up candle than the prior week, a higher high. We see the price percent oscillator heading up and further away from the red signal line, not really paralleling, but moving away. Derivative oscillator losing some energy, but not the same kind of energy loss we see on the derivative oscillator on the S&P 500. So the NASDAQ 100 is stronger from the week. We look at the 2-day chart, and again, we see reflected 4 hours, two 2-day candles heading up. We look at the prior candle representing Tuesday and Wednesday, have 230.25, 230.44, so we did have a higher candle. Derivative oscillator still negative, but did you catch this? How many of you saw this happening? We talked about this occurring. What occurred at the end of the market? Yes, you saw a recross on the 2-day chart on the NASDAQ 100. Did any of you jump in to practice trade that and to see what you could learn? Did you feel comfortable enough doing that? When I say comfortable, if you look at what happened on the day, down 0.43%, we had a red spinning top in the morning, a green open box spinning top in the afternoon, lots of indecision, tending up, price percent oscillator flat on that 4-hour chart, derivative oscillator losing energy. How many of you jumped in to do a practice trade despite the down movement for the day? And did you note all the things that were occurring? You had the red spinning top in the morning, green spinning top in the afternoon on that 4-hour chart. And of course, you had the derivative oscillator still barely negative as the price percent oscillator crossed over going up on the 2-day. I want you to note all those things and see how they tie together as you move along and look to what happens over the course of this next week if you practice traded that. Your trade worksheet gives you ample space to note all these things, to learn the nuances from practicing that trade if that's what you desired to do. So again, important to note all these things. If you're just putting in buy points on your practice trades with none of these important little facts that can mean all sorts of things as to whether it works or not, you're not going to learn the critical stuff that we talk about, why you need to do this every day. We'll see how that progresses over the course of the week or if it fails. Now remember, you have the weekend effect working for you. You guys know what that is, the Monday effect. We've done lots of training, put that training out a number of times. I'll put it out again this next week for those who don't know what it's about. Go ahead, sign up. Make sure that you subscribe at chartingwealth.com for free. Now, let's look at 20-year bonds. Had a weekly vertical crossover back on the week ending. That was last Friday, the 31st of January, last day of the month, first month of the new year. And then what did we have this week? A real pullback. We had reached a high of 145.99 over the course of this week, 145.76, not getting as high. Red open box candle with a wick on top, no wick on the bottom, so it means a slowing in the up movement, in the pace of the up movement. We go from the weekly to the 2-day. What do we see there? Well, we had the Monday candle moving up, then a strong down candle representing Tuesday and Wednesday of this past week, and then ended with a green spinning top, indecision, tending up. But look at that price percent oscillator skewing up quite nicely. Again, that's looking quite nice. And again, as we continue to watch things, let's see the derivative oscillator continuing to lose momentum. We go to that 4-hour chart. Hasn't had enough energy to cross over going up. Mark this in your notes. Watch and see if over the course of this next week, if stocks roll over, keep moving down, are weak, you might see bonds regain a little bit of that flavor. Remember, 2-day still in a confirmed up move. Weekly still in a confirmed up move. The weekly vertical crossover is still in effect. If you get a 4-hour crossover going up, then by all means, my friends, be prepared to jump into an up move on a practice trade on 20-year bonds. Not a bad thing to practice. Now, gonna go to our last chart. I love gold. I love the NASDAQ 100. What do we have going on gold? Now, I'm just mean in general. Those are just two of my favorite charts and favorite things to practice trade. Now, what do we see on gold? Well, remember, I had that weekly vertical crossover going up back on the 10th of January. The next week, a bit of a slowdown. The 2 weeks after that, the week ending the 24th and the 31st of January, lots of nice up movement. What's this week been? A red open box spinning top. Lots of indecision, tending down. Again, how did we end the week up? The high during the week, 148.78. The prior week, 149.68. So again, about a 90-cent difference there, lower this week. So again, that's not what we want to see. Price percent oscillators flat, derivative oscillator losing momentum. Still positive though. So our weekly vertical crossover still in effect. When we look at the weekly chart, go to the 2-day. What did it do to us? 2-day crossed over at the end of the day going down. Even though it was an up day, we've got to mark that. So that makes any continuing position in gold rather risky, even though things were up. We do have that 2-day chart now has crossed over going down. What could happen at the beginning of the week? If stocks started off super weak, what could you see happen? Well, you could, of course, see that price percent oscillator pull back through the red signal line. I don't know, not holding my breath expecting that to happen because the derivative oscillator already crossed over on the prior 2-day candle going down on the 5th, Wednesday the 5th. So these 2 days have accelerated the derivative oscillator. We'll just watch, see what there is to see, pay close attention. 4-hour chart, trying over 2 days to get up enough energy to cross over, hasn't been able to do it yet. So we have a problem in gold in that the weekly chart is still moving up, but that 2-day chart has failed us. We're going to remove the trend line for now. So if we don't really have one, we can draw. That's where we are as we end the week. I sure hope that you will click the bottom right-hand corner of your video screen. If you haven't been watching our video, that's YouTube. Go ahead and subscribe. That would help us out so much. If you haven't signed up for and aren't receiving our daily market review, 4 days a week, our once a week weekly market review, plus all of the special trainings we give out every day, go to chartingwealth.com. Put in your name, email address, and you will get all the info we send out every single day. By the way, Patreon supporters, there will be a Patreon live question and answer session, special training for you this Wednesday, the 12th of February at 12:30 Eastern Standard Time. We appreciate everyone who joins us. You get a lot out of it. It is just some extra special stuff we do for our Patreon supporters. No matter what your level, it starts at $30 a month. If you appreciate what we do, we would sure love to have you as a Patreon supporter. Along with that, you get the weekly, you get all sorts of special training. The short chart training, the long chart quarterly training, the Bitcoin training, and all the other special stuff that we have for our Patreon members. God bless, my friends. All the best. Oh, and the book. Buy the book. Charting Your Way to Wealth. We have an autographed copy for you. Follow the link in the show notes. God bless from the whole team at Charting Wealth World Headquarters.